Welcome back. It is, what is it, Tuesday? It's January 17th, not January, June 17th, 2025. Quick update on the YieldMax ETFs. I haven't posted for a little bit, working on some things, but just to look at quick the YieldMax. So last week, all was produced was Group A. And overall, you can see here, Group A, Snowy was the best, paying about a 7.86% return, and then TSMY was also over 5%. Better than that, it was a weak week. A lot of the distributions were under 5%. Tesla was really an underperformer, coming in at 40 cents. I think that was the worst distribution for Tesla in the fund's history. So Tesla's underneath TSMY. You think Tesla could generate a little bit more distribution than that. So that was kind of disappointing. Then a lot of the other ones, Ybit was even, I thought Ybit was pretty low given the volatility of Bitcoin. That was only at 3.25% return. I think GUI was probably pretty standard in the 3% range. XOMO, very low at under 2%. So that's just a recap of Group A. As you can see here, Group B we got coming up. Give us a second to load. These are the metrics from last month. I think the recent prices might be updated, but overall, this is a pretty interesting week. You got Palantir, NVIDIA, Maro, Bobo, Murni, FVY, JPMO, and GDXY all producing for the monthly pairs. And you can see you got two of them. You got where are we at? It's right here. There you go. PLTY, one of the bigger funds, and so is an NVDY. So it's not the misty week, but when you pair NVIDIA with the Palantir together, you got a pretty big week upcoming. So we'll see what that reports. That should come out tomorrow. I like to check. You can get their email distribution, or you can also get you just follow their X account. YieldMax, and they post everything. As you can see, coming out tomorrow. 618 distributions for the ones I got noted here below. And they also pay the weeklies. Also covering some of the weeklies in a little bit. But yeah, I guess that's a YieldMax update. The one other thing I just wanted to cover quick is I'm starting to dive into the metrics a little bit deeper. So for example, I just got this on Coinbase, and probably do it for the most held funds first. But Coinbase it's not misty, but CONY here is pretty widely held. Let's see, 118, 113. So CONY's the third most held fund, so it is a pretty widely held fund. And for those who own CONY out here, if you go to the webpage here, you can see the general things I like to compare. I like to compare non-reinvested dividends. So owning this fund and not reinvesting your dividends, how it's performed, reinvesting your dividends. And then the third option is just owning the underlying stock. In this case, it's Coinbase, or COIN ticker symbol. And then I like to track the distributions, how the distributions have been trending. I like to track how the distributions add up and see the total return, including the cumulative dividend, as long as the distribution share price. And in addition to that, we have number of shares, so I should say the share count reinvested. So it's assuming you start with 100 shares, right when the fund that was initiated. We have about 461 now. And I like to cover this, and of course, all the videos I make showing these different metrics. I'll include the siteful link, or a site to the website if you'd like to check it out yourself. Try to stay up to date on it and update it pretty regularly, so it should be with update metrics and such. And then here's basically dividends. Here's the ETF price here in blue, and then the cumulative dividend amount here in green. Then you add the blue and green together and get total return metrics here in purple. And then finally, it's just to look at how the underlying Coinbase stock has done since the inception date as well. But to dive into that further, I just like to note, so if you go out to Google and you go to the CONY website here, maybe I'll bring this in. Specifically, if you focus on the YieldMax here, you will notice that they do give you fund metrics, what the fund holdings are. Specifically, here's all the distribution details. But then you keep going down, here's some fund information. If you really want to get in the weeds, you can see their intraday trades, And you can also download all the holdings. So basically, if you download all the holdings, this is probably getting into the details most people don't like to dive into. But you can download those into an Excel spreadsheet here, and then it basically shows you everything that this fund holds at the moment. Specifically, there's parts of this, they own a lot of, maybe I should break this down, they own a lot of cash. So here in green, you got the cash or the T-bills and the government securities that pay a slight interest rate. So highlight all that in green. Then you got here in, I'll put this in red, maybe. This is what they call their synthetic. So when they buy the call and then sell the put, in this case, they're buying the 250 call and selling the 250 put with the August 15th, 2025 expiration date and the 250 strike price. They do the same amount of shares on the call and the put side. And what this does is basically synthetically create a position that mirrors owning Coinbase stock, just of course with way less capital. And then using that as collateral, they, here in the negative here, maybe I should say, let's highlight the ones that are negative, put those in orange. So use that as collateral to sell calls against. So they sell the call options against 255 strike, 257 strike. All these look to be expiring. We got a couple 620s. It looks like we got 625 as well, or the 625. So that's just notation error. 625, when there's only 2 digits, it means the third week of the month. So that's also 620. So all their calls that they're selling are all basically this Friday with the strike prices as noted here and the share amount increments right there. And then additionally, what they're doing is a lot of these are doing what they call selling a credit spread, where they basically sell the call. But then on a certain percentage of these, they're also buying a call out further in the price direction higher on Coinbase stock. So this does, if there is a dramatic move in Coinbase stock where it like shoots up 10, 20% in the week, you're initially capped on your upside. So for example, let's say you got this 255. You're initially capped at 255 from gains, but once the stock goes over 275, you're actually capturing gains again. So it's a way to take in premium, but then use a little bit of that premium to buy insurance on the upside in case there is a dramatic move to the upside. In my opinion, I think this is a good way to do it because you really hate to be capped totally on the massive up weeks. So I think it's a good way to ensure you capture some of that huge return when it does come, and you just pay a little bit of premium to do that. But that there is basically how these funds are structured. And then as far as what I'm doing is, so understanding the spreadsheets, I guess it takes some time. Also trying to look at these shares and trying to like comprehend them visually from a magnitude perspective takes some time. So what I did is I tried to, on my site here, I tried to visualize this with the help of illustrations. So if I go out here, you can see all the CONY general metrics, or if you want to go in depth, you can click the CONY in depth. Maybe I'll think of a better term in the future, but that's just what I have right now. And so what we're seeing here is we got the market cap of the fund, the CONY fund, just showing how the market cap is varying. Also showing how shares outstanding are varying. Shares outstanding doesn't really matter too much. As more money pours into the fund, they can basically increase the size of their synthetic position and sell more calls against. But it just shows how money is flowing into this fund. I'm sure a lot of people own it, have dividend reinvestment on. So every time they get a dividend or distribution, it goes right back into the fund, thereby increasing the money flowing into it. So I just thought these are interesting metrics to maybe track a little bit, see how the market cap and the shares outstanding are trending over time. And then as far as components, this kind of just breaks down what I already showed. A certain percentage of the fund is in cash. Here's the actual market cap of the fund. So the market cap is basically the price per share times the shares outstanding. So it's basically the value of the entire fund, and that's basically made up of your cash component. And then down here, you got the other contracts, basically the calls that you're selling, as well as the kind of calls you're buying as insurance to make the credit spreads. And then here's the synthetic value, or the value of your synthetic position. That's like kind of overall, if you want to see this on a per share basis, you can see that right now the fund has, and this was as of the last time they updated the spreadsheet, but they got 783 in cash. They got a synthetic position that's technically worth like 44 cents a share. Their other contracts right now represents a negative almost 16 cents on the fund. Assuming none of those strike prices get hit by Friday, this basically goes to zero. So this would go down, therefore pushing the ETF price up. So that's how you make money in these funds. It would probably push you've already got the cash from selling the contracts, but the contracts have a negative value on the fund. As that negative value goes down, the ETF price or the price per share of the CONY fund would go up. Then we got the synthetic position as well. So the synthetic here, as I show, they have that synthetic position. Basically what I'm showing here is they have 46,950 contracts. They've written calls against, basically they've used their full capacity. For every contract they have in the synthetic, they've written a call against it to create option premium. But they've also bought 27,170 shares of insurance. So they got like this 50% ratio of insurance. And then here's where you really get into it. So this shows all their contracts. Anything that's negative is a call that they sold. Anything that's positive is a call that they bought. The red line is where their synthetic is structured or set. So at $250 a share. Black line is where the total stock price of CONY, the underlying stock, is. And you can see this is just based on a contract basis. So of course, as I said before, and it shows the magnitude. So you can see they got a lot of contracts sold at this 265 strike price. They've got a fewer amount of 255 strike. And then they got insurance, the most of it's at this 277.50 strike. You can view this data in different ways. You can also see as a percentage of the total contracts they have sold. You can see, so I think all these negative ones should add up to 100. So you got 12% plus 37% plus 21% plus 17% plus 11%. So you can see like right here, 11% or almost 12% of the shares that they have sold are at the 255 strike. And then 37 almost percent or almost 38% are at the 265 strike price. And then you got 33, 11. I believe those will add up to one. Then it shows you what percentage they got over here as insurance on the credit spread side of it, or that call option you buy as part of the credit spread. And then, of course, feel free to let me know if any of these metrics help you. They help me visualize how the fund is performing, what kind of targets you're looking for. If the fund doesn't hit 265, all these contracts that they took premium in for basically goes to zero, and you basically just keep that money. Other metrics here. So there's a lot of ways you can look at it. So I got a lot of tabs, of course, but you got other contracts, the market. So here's the market value of the actual contracts. So at the 265, that's 8.4 million of basically premium. That's the current value of it. At the 255, they got 5.5 million. And then as far as what do these contracts cost for the insurance, you can see they spent like 812,000, 2.8 million, and 1.17 million. So just what they sold here at 5.5 million, use some of that money to buy these contracts over here. And then basically all this is unhedged. That's for example. That's total market value. I think the total market value doesn't really hit home with people who are buying these on a per share basis. So I got this also in terms of per share. So you can see like at the 255 strike, that's roughly almost 4 cents per share in premium. At the 265, we got almost 6 cents of premium. And then at the 270, we got at 1 cent on premium. So it breaks it out in a per share, what the premium is that you're taking in. I would note 6 cents doesn't sound like a lot per share, but that's just for the weekly contract that they sold at this strike price. And we're talking a stock that's maybe $8 a share. So as a percentage, I think I got another tab actually shows, other contracts per share percent. So that is almost 0.7% the share price. And that's just at the 265 strike. So that's a decent premium. And I will note that's not necessarily the premium they took in. That's what the value of it is right now based on what the current time left in the option is, as well as where the strike price is, and as well as where the coin, the underlying stock, is trading. And then probably wrap it up, but I got a few other tabs here. So here's just showing you how much money you can make if the stock price goes up to the strike price, or the underlying stock goes to the strike price, and see if it moves and actually hits this 265. It will hit the contract you sold, but the synthetic basically would make 19.7 million in the journey to get there. So I'm just showing that. I got it on a per share basis, so it's 13 cents per share. And then here is just a quick illustration of like how much money that synthetic portion of this fund will make based on where the share price goes. So you can see if CONY shoots up to $3.25 a share, and the synthetics can go up $2.38. It's pretty easy. It basically trades like the underlying. So if the underlying goes up 10%, the synthetic basically goes up 10%. But this basically just shows you, like, based on certain underlying prices here, what the synthetic will actually do. And then finally, I just got a tab here that shows, so basically the spreadsheet from their website. It basically pulls all that information and kind of shows where I'm pulling the data from, which is clear. I already kind of showed that, but it also gives like maybe the date of update. So I'll also kind of show like when my data is updated through. So I don't know, if you find this information useful, I'll try to keep providing it. I find it helpful. Maybe I'll make it a little bit more clear in the future, but there's a breakdown of CONY as far as where their current fund sits, where the contracts they sold are at as far as strike price, and what the magnitudes of those strike prices are. So you can see they got way more contracts sold at the 17.6 or 17,690 contracts at the 265. I will note it says shares here. It should really probably say contracts. So shares would just be the contracts times by 100. But so it's just a magnitude multiple of the contract amount. But yeah, so that's a CONY breakdown. Let me know what you think, but thanks for tuning in today.